Hi, it's KOFIFOREX once again. Welcome to today's chapter of Forex trading tips and strategies. Let's go. 1. Risk management first. Never risk more than 1 to 2% of your trading capital on a single trade. Use stop loss orders to protect against unexpected market moves. Diversify across different currency pairs to reduce exposure sources. Style that fits you. For example, scalping, very short term trades aiming for small profits multiple times a day. Day trading, opening and closing position within the same day. Swing trading, holding trades for several days to capture medium term moves. Position trading, long term approach based on fundamental analysis. Pick one style that matches your personality and schedule, then refine its sources. Leverage technical analysis tools. Use support and resistance levels to identify entry and exit points. Apply moving averages to spot trends. Explore Fibonacci retracement for potential reversal zones. These tools help you avoid emotional decisions and rely on data driven signal sources. Stay updated on economic news. Forex market reacts strongly to interest rate decisions, inflation data, and employment support. Use an economic calendar to track upcoming events. Master trading psychology. Stick to a trading plan and avoid impulsive trades. Accept losses as part of the game, don't chase them. Patience and discipline often separate successful traders from those who burn out sources. Overleveraging, attempting but dangerous. It magnifies both profit and losses. Emotional trading, fear, and greed can ruin even the best strategies. Ignoring fundamentals, technical analysis alone isn't enough. Global events can shift market instantly. Scams and unreliable brokers. Always trade with regulated brokers to protect your fund. Thank you.